Absolutely. Okay. First thing, right? First thing we need to be doing for an unlimited marketing budget is what, Natalie? Is what?
Testing and measuring.
Testing and measuring.
Natalie
I knew that one.
Natalie gets tested.
Right.
I like this.
So we've been talking about testing and measuring. We spent some time on it last week. That's the first thing you need to do is test and measure. So the next question is what? What do you test and measure in order to have an unlimited marketing budget? Well, here's a couple of things that is I find to be very interesting. If you think about your profit and loss statement, right? Your profit and loss statement that you run with all your revenue and all your expenses on it. Typically, what you see marketing expense on that profit and loss statement, don't you?
Mm-hmm.
It's usually treated as an expense. If you ask any accountant, where do you put marketing? It's an expense. Well, how we coach our clients is that marketing is an investment, as long as you're testing and measuring.
Which it should be because it is a return.
For every dollar that you spend, you should get a return.
Right.
So wait a minute. So if you're getting more money back than you invest, then you end up with a net profit, right?
Mm-hmm.
And that net profit continues to feed your marketing budget. And guess what? You've got an unlimited marketing budget, because if you know that every time you invest $10 in marketing, you're going to get $15 back, how often would you make that $10 investment, Mike?
As often as you could.
As often as you could, right?
Right.
So what are the things that we need to focus on in order to make that happen all the time? There are two things that we need to focus on in order to have an unlimited marketing budget. The first thing is acquisition cost. What does it cost us to acquire a client? That's the first thing. And we'll talk about how you figure that out in a minute. So acquisition cost is the first thing, and then the second thing is lifetime value of a client. How long, once you get a client, do you have them, and how much money are they bringing in over their life?
Mm-hmm.
Those are the two components that we need to understand and work on in order to make sure that for every marketing dollar we spend, we're getting more and more and more back, and in which case you can spend as much money as you can get your hands on in marketing, because you know it's going to give you a return.
Sure, absolutely, and that makes absolute perfect sense.
So simple stuff. So the question is, I ask our listeners, how many of you know the acquisition cost of one of your clients? We need to know that. How do you figure it out? All right. Well, the very easiest way to figure it out in a macro sense, to get an overall picture, is you can take a look at your 2007 financial statements. And go down that line that your accountant's go down line by line in your P&L and find that marketing expense line. And then go into your QuickBooks or go into your database and find out how many new clients you added to your client database last year and do the division.
Mm-hmm.
See, it's either addition, subtraction, multiplication, or division, Mike. So you
and
don't
again,
have to be scared.
I'm not drawing triangles or.
Mike's going white here.
And the word isosceles does not enter into the picture.
It does not. You take your total marketing dollars divided by the number of new clients. That's your acquisition cost for a new client. So you've got that number. Now the key is to reduce that expense, obviously, as low as you possibly can make it, right? But it's just like in the whole grand scheme of things under testing and measuring, you got to know where you're starting in order to reduce it. And it's amazing. Once you get that number and you know your acquisition cost in your business, it will change the whole way you look at marketing. It will change the whole way you look at client acquisition once you have that number. Because it's going to force you to ask yourself questions that you never asked yourself before about your marketing and advertising.
When you do that, and when you put this together, does promotion go into the same thing, or is that kept as a separate line?
It depends upon the business. We typically will load it all in. As long as you're consistent, what I tell people when they ask me those questions, as long as you're consistent from year to year in what you include, you're good. Mm-hmm. You're good. What you don't want to do is have promotions in one year and not in the next, because then it throws yourself off because you're not comparing apples and apples, right? So just make the decision of what you want to include, what you don't, and go with it.
Mm-hmm.
And go with it. So that's acquisition cost. Now, there's a couple of other things where we talked about testing and measuring last week that comes into play on this, and that is when we track leads, right? That was the homework from last week.
Sure.
You know, how many people actually track their leads?
Mm-hmm.
Not only do you have to track the number of leads that you get, But if you've got 4, 5, or 6 lead generation strategies out there, you have to ask the second question, which was the second part of the homework last week, where did you hear about us? Because we have to assign those leads now to lead generation strategies and marketing campaigns, right? Because we can do it, we can calculate acquisition cost on a macro basis.
Right.
But
And you
we-
need to know on the micro, the smaller scale,
Right,
what's
on the-
working.
Right. So if we generated, let's say 1,000 new clients last year, how many came from newspaper? How many came from referrals? How
Well,
many
because I
came
was
from
going to say, if it came
telemarketing?
from a referral, is that considered zero cost?
Zero.
Right? So it's really lumped in that expense.
Generally speaking,
Right.
unless
Yes.
someone's decided to invest and do referral fees in a referral program.
That's
Right?
true. Uh-huh.
Right? So you could have a cost built in. But I think you're right, Natalie. Typically, referrals, sometimes, for a lot of times, just going to be over the phone. Hey, I've got a
Right, that's
referral
true.
for you. So that's going to be lower. So when you get into that whole discussion, so this is what's really cool about this thing.
Right.
Let's use that example that Natalie had, right? Where we now know that last year, out of the overall 1,000 leads that we generated, we got 400 of them from referrals. We need to know what it cost us to run those referral programs. Now, if it was just word of mouth for the 400, cost is zero, and you can't get any lower than that, right? That's great. But maybe we've got a referral program where if you send us a referral, we send you a coupon for a free dinner for $200 or whatever
Sure.
it is. So we have to track that. That's a cost of that referral program.
Right.
Right.
Right?
Is that promotion as well?
It depends on how you classify it. I would coach our clients to classify that as each marketing program should have a class within your marketing so you can track them. So referral programs cost what? And if that dinner coupon is part of the referral program, it would go as a cost of that.
And do you then plan in a budget for each one, or are you kind of
You plan a budget from each one based upon prior year's
years, right.
results and what your return is, right? So that's how you could take that macro acquisition cost, and by tracking your leads and where they came from, clearly identify where your customers, what marketing strategy your customers were generated from, and they need you that math. So the acquisition cost in the referral program was 50 cents per lead. The acquisition cost in using our advertising was $300 a lead. So we have each one of those broken out. So then you get into this great sort of discussion and brainstorming about, okay, if the referral strategy cost us 50 cents, was an acquisition cost of 50 cents, how can we tweak that? How can we change that? Do we really need to be giving away $200 coupons for a referral? Can we do 150?
Sure.
Right? If in our advertising campaign with a $300 acquisition cost, let's take a look at that. How can we change that? Is there a cheaper medium that we can get to our marketplace than the one that we've currently got, where we've got the same distribution? So you see how if you've got this information from testing and measuring, you can ask yourself so much better questions.
Sure.
To drive that acquisition cost down. It's always, once you have it, how can we make it lower? What do we need to do to get it down? How can we get more creative to reduce that acquisition cost? And that's the one side that you have to focus on to build an unlimited marketing budget. But it's
Everything comes back to testing and measuring.
It all comes
Yeah,
back
there we
to
go.
testing and measuring. And the other side is lifetime value, which is the one you've got to increase as much as
so
possible.
getting a repeat customer, or how long does that client remain
Right.
a client?
Exactly right. So the question to our listeners is, do you know the average amount of time your clients stay with you and buy from you on a regular basis? If you don't, that's the starting point in figuring out lifetime value. How many years will a client stay with you and continue to buy from you is the first thing you need to figure out. Now, how do you do that? Well, you got to go through your database and take a look at it. Right? Go through it. This client's been with us for so many years. When was the first time we sent him an invoice? And when was the last time we sent him an invoice? You can get it all right out of QuickBooks. and then you just do the averages